Hello and welcome to Gold and Silver Assets. It's Sunday the 19th of January 2020. So we've had quite a lot of sideways movements in the gold and silver markets, and so it's been quite a nail-biting wait in the past week. And so today I thought we'd take a look at some of the key levels that we ought to look for in the coming week. So we'll start with gold in US dollars on the monthly scale, and overall I'm long-term bullish. Our line in the sand is this red line here, and I'm only going to turn bearish if price drops below that line, but I think it's highly unlikely. We have a strong support level here. Initially that acted as resistance on the way up, and now I would expect that to be very strong support. But we also have very strong overhead resistance, and we've talked about this a few times as well. And so this is going to be formidable. It's not going to pass through that immediately, unless of course we have some major geopolitical events which could potentially cause gold to slice through that. So overall, basically we've got a roughly $240 trading range that we're looking at. If we do go above the 1600 level, then the price action between $1,600 and $1,800 is likely not to be straightforward. It will probably be a consolidation type movement in that area because of all this price action that we had earlier on. So let's move on to looking at gold in US dollars on the weekly scale. And last week we spoke about this shooting star candle, which appeared to be quite significant and a potential reversal signal. However, if you remember, I did say that we would need to see a red candle that closed below this green candle in order to confirm the signal, and that did not happen. Instead, price did actually bob just below the candle over here, but instead it moved back up again, and so we formed this hammer candle. So a hammer candle can actually sometimes signal further upwards movements, but I'm not completely convinced that this is the case here. In order for that to occur, we would need to see another green candle next week that closes above this red candle. And so basically we've got two conflicting candles here. This green candle is strong because it is at the end of an uptrend and it's hit overhead resistance, whereas this hammer candle, to be a reversal, ideally would be at the end of a downtrend, which we're not strictly in at the moment on the weekly scale. If we do get a close above this trend line here at 1,580 US dollars, then I would be reasonably bullish. But as I said, the price action over here will be quite messy, I suspect, and we'll probably see even more consolidation. Another option is that if we don't see a close below 1525, then we could just move around this level before having another crack at the 1,600 US dollar level. And the other possibility is if we do break down below 1525, then that opens up the possibility of 1,500 US dollars hitting this trend line here. Now, this actually provides quite a lot of support here from the recent price action. And because of the way that gold is behaving, it's been behaving quite resiliently and showing some strength, then we could possibly get the next move up from this level. And I would expect the move to be pretty strong. We could potentially, if we do get a strong downwards move, then there is the possibility of price going down lower, but it's becoming increasingly hard to justify that as an option. I think that's a lower probability, but it just depends how price behaves within these two trend lines here. So In the shorter term timescales, the daily price action doesn't really tell us much. So let's instead have a look at gold in US dollars on the 4-hourly scale. And what we see forming here is an ascending triangle. And this is getting close to the apex, and so this is going to likely break out in the next 1 to 2 trading days. What we'll be looking for here is a break above the 1562 level, which is this upper trend line, and that would give us a target of getting back to the 1600 US dollar level. And I suspect because of that formidable overhead resistance, if it does break out upwards, then we are likely to get some degree of rejection at that point. If we get a breakout below the 1553 level, then we would be looking at a target of around 1525, and if that breaks, then we'd be looking at the 1500 US dollar level. So those are the shorter term targets to look out for. So let's have a look at silver in US dollars on the monthly scale. And silver hasn't done anywhere near as well as gold has, and it's not reached anywhere close to its all-time highs like gold has. We do have a strong lower support line here, which has held for many years, and I would expect that to remain strong. And so I don't expect price to fall below this. So this is our line in the sand here. We can also look back at support and resistance levels, and we've got a strong band of support and resistance here between the 16 US dollars and 18 US dollar price range, and that's where we're bumping along now. So we do have a fair amount of overhead resistance still to overcome. So let's move on to silver in US dollars on the weekly scale. And here we've drawn this line in the sand, and so I would not expect price to go below the $14.90 range. If it does that, then I would completely flip my ideas and I would become very bearish at that point, but I think that's highly, highly unlikely. And we initially looked at this pattern down here as being a wedge. But looking at it, because it basically didn't reach its target price, I started to wonder whether it's a different pattern. Maybe it is a channel, or maybe even a bull flag. So if we draw a line joining the lows and then clone that line, that actually showed the bounce points that we recently saw. So the key levels to look for here would be a close above 1875, that's above this line here. If we are unable to close above that line, then we'd be looking at a most likely bounce point below at around the 17.10 cents level. And this is likely to provide strong support, as we've got lots of support through here and more recently over here. So I think that's the most likely bounce point if we do drop down, and then I'd expect another big move up. If that level does break, then that leaves us to the 16 US dollar price point, which is the bottom of the channel. And at a real push, if that breaks, which I think is a lower probability, that would open up the 1490, in which case we certainly would bounce off that. I'm pretty sure of that. Okay, so let's see which of these key levels points the way forwards for us for gold and silver. Thanks for listening, and don't forget to like and subscribe. See you next week.